Hey guys, this is Beyond Swing. In this video, we're going to talk about the best ways to find a good equity mutual fund. We will be covering everything in detail, so at the end of this video, you'll be able to analyze any mutual fund yourself. Let's dive straight in. Here's a quick intro explaining what mutual funds really are. So, mutual funds are basically pooled investment funds where a large group of investors come together, pool their savings, and invest in good companies. The benefits of mutual funds are as follows. First is diversification. You get to invest in a lot of different companies. Second is professional management. These guys are working around the clock to provide you with the best returns. You don't have any headache regarding stock selection, when to buy, when to sell, etc. These guys are working for you. Third, you can start with as low as rupees 100. Fourth and the obvious one, it helps in long-term wealth creation. There are three major categories of mutual fund: large cap, mid cap, and small cap. Selection of category of mutual fund depends upon two things. First is risk appetite, and second is time horizon. Now, all these three categories are risky indeed, but large cap is considered to be the least risky, then followed by mid cap, and then small cap, which is considered to be the most risky. Now, I'll be using two platforms for selecting the best mutual fund. What you can do is just follow along or note everything down. So, the first website that we're going to be using is Paytm Money. I like their screening interface very much and it gives me access to all the mutual funds at one single place. So, I don't have to scour around on different websites. Now, after arriving on the website, what you can do is just click on mutual funds right over here. Then scroll down and you will see equity mutual funds right here. Click on equity. Now select mid cap in the subcategories. Now, as I explained to you guys before, if you're investing in mid caps, keep a duration of at least 5 years. So let's change this returns duration to 5 years. Now, you guys can see we have quite a lot of funds over here. Now, how to analyze all these funds, like which one is the best? Of course, we are not going to go solely on the returns. Like if this fund is giving me a 20% return, this has supposed to be the best. No, this is not the case. So after finding out all these funds, what you need to do is go on the second website that we're going to be using. It's known as valueresearchonline.com. I'll be sharing the links in the description so you guys don't have to worry about this. Now the first fund that we have identified is Access Mid Cap Fund. Now let's try to analyze this fund first. So after coming on this website, the first thing that you need to make sure is that direct plan is selected over here. Now what is direct and regular? See, there are two types of mutual funds. One is regular and another one is direct. A regular one is where you are investing via some broker or something like that. But since we are doing this ourselves, so we need to select the direct plan. The fees for the regular plan is going to be slightly higher than the direct plan because there is a middleman involved. So we'll be selecting direct plan for this analysis. Now, if you scroll down, you don't need to go through all this information. The first thing that we need to take into account is expense ratio. Expense ratio is the percentage that is charged by the asset management company of where you are investing your funds in to manage your funds. These guys are working for you, so they'll be charging some money. Of course, that's the case. So the lower the expense ratio, the better. The second thing that we need to notice is this turnover. Now, what is this turnover? Let's say Access Midcap Funds invest in 100 stocks and the turnover of 29% means that 29 of those 100 stocks were sold within a year and exchanged with some other stocks. So, anything greater than 50% means that the fund is more of a trading fund as opposed to investing. So make sure this is less than 50% at least. The next thing that we need to take into account is these risk measures. This is a really important table right here. We do not need to look at mean. We need to take into account standard deviation. Now, what is standard deviation? Standard deviation is the volatility of returns. That's it. Keeping it simple, it is the volatility of returns, how volatile the fund is. Now, this should be lower than the category. Since the category that we are investing in mid cap is 23.35, but the fund has a volatility of 18.74, which is actually really good, which means that the fund is less volatile than the category. The second thing that we need to analyze is Sharpe ratio. Now, what is Sharpe ratio? Sharpe ratio is a measure of risk adjusted returns. Now, anything greater than 1 is a good sign. So, we have a 1.1, and look at the benchmark. Always compare it with the benchmark 0.84, which means the benchmark is producing 0.84 of risk adjusted returns, but our fund is able to generate 1.1, which is good sign. So anything greater than 1 is a good sign. Now, what is Sortino ratio? Sortino ratio is similar to Sharpe ratio, but it considers only the downside volatility, because upside volatility is actually positive for the investors. Are you going to be concerned if the stock is moving higher and higher? No, right? You are going to be happy. But yes, you are going to be concerned if the stock is going lower and lower. If Sortino ratio is greater than the Sharpe ratio, it is positive, which means it's a good sign. Again, Sharpe ratio needs to be greater than 1 and Sortino greater than Sharpe. Now, what is beta? Beta is movement with respect to the market. Market in this case, since we are analyzing a mid cap fund, the market is going to be a mid cap benchmark. So, if the mid cap benchmark moves by, let's say, 1%, how much the fund is expected to move? Now, since this fund has a beta of 0.71, it means that the fund moves less with respect to the market. This is helpful in the case, for example, if the market falls by, let's say, 1%, the fund will only fall by 0.71. Now, the next thing that we need to analyze is alpha. Alpha is nothing but what the fund has been able to generate over and above its expected returns. A positive number is fine. You do not need to overcomplicate things. A positive number is fine. Now, what I'll do is just share a quick summary of everything that you need to go through right over here. Now, what you can do is you can use this framework for any sort of category you like. Thanks a lot, guys, for tuning in. Any suggestion and feedback is welcome in the comment section below. I will see you guys next week with another educational video covering stock market. Hey guys, if you're new here, you can check out my Instagram where I post regular market updates, my personal trades and stocks that I'm looking to buy. One post daily at 6 p.m. I'll leave the link in the description for you guys to check out.